Yeah, Tuesday. What's up, everybody? Tuesday morning. Hope everybody's having an amazing day. Welcome to today's edition, Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys have all had a great Monday. We sold off pretty good yesterday, and we're recovering a bit this morning, but let's see if that recovery is going to hold. So good to have all of you here with us today. So real quick note, for those of you that are new to the channel, make sure you hit the subscribe button, hit the notification bell. If you're a returning regular viewer, thank you for coming. I genuinely appreciate it. It's great for me to have a venue to be able to talk about what I really love to get up and talk about every single day. Never once do I wake up in the morning and go, I just don't want to talk about trading today. I just don't. I never do. And I really love the fact that you guys come and watch it every day. So thanks so much for coming here. I'm excited. Let's go ahead and get rolling. So if you guys would, as we go through today, if there's anything that you have a question about, please put it in the chat window. We're going to go about 30 minutes this morning, starting with our futures markets in the equity arena. So yesterday, the S&P. Now, I took the line off. Because we had already seen, price move away from it. But we had this short set up from our Sunday night session, and that's really, we talked about the fact that in that one and in the NASDAQ, if you were still in those, to take your stop and move them to break even yesterday. And so I'm not sure how many of you held that throughout the day yesterday, but that wound up being a really good trade throughout the day. And now we actually came to what was our next little breakout point. We didn't get any good entry on that breakout point in the ES. We did in the NQ. The NQ did give us a bit of basing to give us an excuse to get short on this breakdown. And then it came to our demand level and rallied up off of the demand level. So both of those entries, pretty effective, both in the ES and the NQ. And that breakdown was over 100 points. And then the rally back up was almost 100 points. So two really good mornings. Two really good setups that the market gave us. And now we got to look at what's our next opportunity. So starting in the S&P, looking here at this hourly chart, my mind immediately comes to this area up here, although we've just now rallied back to this wick over wick supply, and we're starting to come down off of that level. So what I want to do first is let's just pull a quick Fibonacci retracement of this zone, of this trend line. So if oops, that's not what I wanted to do. Activate drawing, you big dummy. Not activate, edit properties. Ugh. Can't hit the right buttons this morning. Okay, so when I put my fib lines in there, what do we see? Well, now, by the way, I don't live and die by the fibs, and I'm not one here to tell you that fibs make or break turning points in a market. I'm never going to say that. What I will say is there's a lot of traders that use them. And those traders that do use them, if there's enough of them that use it, what you get is it becomes a self-fulfilling prophecy like all technical analysis. So when I'm looking at these areas and these levels, we see this big move down. This is a retracement. We retraced back to the 38.2, got a little pullback. Now we've come back almost to the 50%, and we're getting a small pullback. I'm actually going to look next at the area that exists right here, right at the 61.8 level of the retracement. Right now, I'm going to remove that line. So now that's a 61.8 retracement of this trend. It's also formed at a pretty decent time of day. Matter of fact, that's the European market close and then late U.S. morning. And it's this area that was a prior pivot, right? So we're seeing a lot of confluence come together as to why that level could hold for a good short. Now, when I look at my 4-hour trend, my 4-hour trend is still a downward trend. Lower swing lows, lower swing highs. I use the zigzag indicator in order to be able to really see it much more clearly. And so our downward trend is still intact. And so getting short at that pullback would be a pretty good area and a pretty good opportunity for a short. So you're looking there at 34.61 by 34.67. Oh, you're saying the Russ already hit that level? Good. I have to go take a look at that because that'll be even more telling. If we do make it there, it'd be even better. So in the NASDAQ, where do we look? Let's see. In the NASDAQ, very similar picture is going to be this area right here. Although I will say that in the NASDAQ, it's not quite as clean. It's much cleaner in the S&P than it is in the NASDAQ. In the NASDAQ, I'd actually rather see a bit of basing in here for a breakdown. On a 15-minute chart, I'm wondering if this is just a real quick retest short right up into here, okay? So on a 15-minute chart, that could be a real quick retest short right up into this level, this 11,721, 11,731. If price comes back into there, that might be a very good retest short in case we don't make it back up to those upper zones. And as far as demand goes, when I look at my demand, that's we got 1, 2, 3, 4, 5, 6 down days in a row. We are coming close to an area where you would anticipate a bit of reversal, you know, back to this region in here, but it's not quite there as of yet. When I look at that on the ES, the daily chart, I will say I was a little bit surprised that we didn't get a stronger reversal off of this candlestick, right? That candlestick is normally a pretty strong reversal candle. Oh, that unfortunately we didn't get a really good reversal off of that. It's getting hot in the house. Off of that position. So without the reversal off of this position, I was really surprised at that. But I think that the daily trend, you know, still up. This is just a bit of a pullback. I'm going to pull a fib on this amount just to see what that looks like. So if we pull a fib on this amount, taking a look at this, this is the 38.2 retracement of this. 50% retracement would be right here. So that the daily chart 50% retracement is about 33.73 off of the last big move up. And so if price comes back, you know, we've got a little bit of bounce off that 38.2, but the 50% is the much stronger level. Now, why am I looking at that? Because I want to see where can price continue to go down from in our downtrend, right? Where can price continue to go down in our downtrend? Because when I look at 4-hour levels of demand, where's my next quality level of demand that you see, right? Well, my next 4-hour quality area of demand doesn't come into play until here, right? Right there at about 33.50. That's our next 4-hour quality area of demand where we've got, you know, decent reversal candidate, which would put us right at that retracement level. All right. So those are just my thoughts overall. Keep that in mind. Next, the Russell. So looking at the rut. So the rut, we had a 15-minute level down in here as a potential reversal. Price came to that level and then literally laughed at it. Ha ha ha, I laugh in the face of danger. And just blew right through it. Like just went right through it. Nothing, no stopping. Came to this secondary level down here and just barely was a little higher than that level. I don't think actually got into that trade. It was just a few ticks higher. But technically this would have been a confirmation long anyway, had you decided to take it based upon our overall trend direction. And so now, looking at our 1-hour chart, Dennis had mentioned that we've already come into that level in the Russell. This wick over wick right here, I would say that I agree with that. I'm actually going to, since that level's already been touched, I'm going to look at this wick over wick right here, just a bit higher. And the reason that I'm looking at that is because if we get one more thrust higher this morning, that lines up very well with our S&P level up here, okay? So that S&P level, 3461 by 3467. Dennis says you really see it on the 30-minute. I actually don't even look at a 30-minute chart, Dennis. But for you, I will. Yeah, you're right. You do see this very clearly on the 30-minute. It's definitely the pivot right here, this area right here, and price moving back down. So yeah, agree with that one. That's 100%. I do use the 15 as my main kind of refinement time period, and technically that 15, you might actually get another retest back up into this little region here if this move down continues much stronger, similar to what we saw in the NASDAQ, right? That's kind of what we saw in the NQ on that 15-minute zone. Look at that, son of a gun. That's a good breakdown. Yeah. Well, see, for me, Dennis, I use I go by the multipliers of, I try to stick to a multiplier of 4. But I don't know why. I heard that a long time ago. I think I might have heard it from Brandon. But I stick to a multiplier of 4. And so a 15-minute chart times 4 is a 60-minute chart times 4 is my 4-hour chart. And that's why I maintain that consistency. You're right. The 30 is a refined 60. But I stick to that multiplier of 4 just to maintain that consistency. All right. So those are our levels that we have. Let me wrap this up. Make sure everybody got a picture of that. Okay, let me share this grid right quick. Yeah, 4, 5, 6. That's what it is. I knew I'd heard it somewhere. All right. So next, let's go take a look at our commodities charts. So in our commodities charts, yesterday we talked about our gold IC. So I'm not sure how many of you got into that gold iron condor, but that one is still working out pretty well. And we had talked yesterday about this hourly level for this gold trade. Price came screaming down into that zone, and then it gave us a pretty decent move away. Now, this gave us a good 2-to-1 move away, 3-to-1 move away. And so I'm okay with that. That was a nice little setup, a nice little trade. But overall, what did price do? Well, price basically went nowhere. Now, we talked about this as a potential breakdown. My basing was a little far away from where I would normally want basing for a breakdown, so we didn't get that potential on the breakdown because my basing was way up here. I would need basing. Remember, we want narrow range candles close to that zone. Define close. Close would be candles that happen right in here. I didn't get the basing necessary for a quality breakout. So this would not be considered a false breakout. Is that a false breakout? No, that is not a false breakout because that is not a breakout. That is just normal price movement. It's not a breakout until I get 3 touches and basing immediately before the level. So with all that being said, that removes all those levels. Okay? When I look at this, let's see. I guess it depends if you use natural hours or session hours. Interesting comment yesterday about the 30 minutes is better to assess index. Yeah, I've never looked at that, John. That's an interesting concept. Lovely clicks restrictions. Oh, poor click. I've not seen it. I cannot comment. I know nothing about it. It was developed after I left my prior life. So gold is seeing, for those of you that are trend line followers, gold is seeing that rising uptrend. It's a slow roll to the upside, but that's actually a good thing for those of you that are in that iron condor position. Slow roll to the upside. We did get a very recent tweezer top right here in the overnight. And so with that most recent tweezer top, I think what you can look for is a potential for price to continue to trade down from this area. The tweezer top is usually a really good reversal signal. For those of you that are not used to those, it's really where 2 wicks come together at exactly the same point. It looks like a pair of tweezers up there at the top. And so the next level that I'm looking at of really any importance, does anybody see a great level on an hourly chart? I'll be honest, I don't. Just looking at this, I don't see a great level on here, and so I'm just not going to add anything to the list. I'm going to wait a day or two and we'll see if something comes up. All right, so that's gold. Crude oil. We got this area that we were talking about yesterday, and man, we're just hovering around there without really able to get us any follow through on this move. This just has not given us any follow through and really no strong movement. So really nothing to add to this market either. Both crude oil and gold very sideways, nothing to add. I mean, I hate to sound boring, but guys, I just don't feel like I'm adding a whole bunch to there. So nat gas. So nat gas, we looked at this 15-minute level yesterday. It's actually a pretty clean level. Price came close to the level without getting filled. So when price comes that close to the level without getting filled, what do? When we get this close, I mean, we got within a few ticks of the level without getting filled. What does our trade do? Exactly, Trent, I love that. Better boring than forcing a trade. It's kind of like, if those of you guys were in the summit last week, I love one of the things Champ said. He said you have to embrace the boring. Yeah, we switched this to a confirmation entry, and then price just blew right through, allowing us to say, okay, that trade went against me, but I never got into the trade in the first place because if I'm following my rules, there's no reason to have gotten in. And that's the style that I want to look at is what keeps me out of bad trades. So now I'm looking at this little area down here, the origin of this move up. Would be 857 by 843. That's a 15-minute chart, so it's got to be in purple. We cry. Do not cry. There's no crying in baseball. I can't tell you how many times I say that, by the way, to the 6, 7, and 8-year-olds that I coach. Stop crying. I say it all the time. All right. So that would be the level that I would look for in here. On our 4-hour chart, our trend's continuing up. Next, let's go to the HG. So in our copper position, we did get a decent little bounce off of this 15-minute level. Popped a bit below, however, and it got below the pivot. So that was actually that was a good level that wound up being a pretty quick stop out. Now, unfortunately, it was a quick stop out that in the overnight went exactly the way that we thought it was going to go anyway. And even if you put your stop below the pivot, this one just nicks you out, which is so damn frustrating. I mean, darn frustrating, sorry. So darn frustrating when price just wicks you out of the level, and then we move, right the way we thought we were going to go. So that was, as nice as the equity markets were yesterday, that one was a little bit frustrating. So now what we need to look for is where's our next opportunity on a pullback? Well, we've broken above this breakout level right here, and the breakout level that we broke above is a nice level, but I didn't get an entry, and I didn't get an entry because I didn't get basing, and so. Without that basing, that level's not going to be something that I can get into there. Oh, wow. Making fun of Sidney Crosby. Ooh, that's low, brother. That's low. I will tell you, I am a Pittsburgh sports fan, but of all the sports, I'm not really a Penguins fan. And I know a lot of people it bothers them, but so Peter, I'm a huge Pittsburgh sports fan, just not the Pens. Never got into hockey. My father, all my best friends, man, they are hockey junkies. I tried. I really did. All right. 3099, 3096 as the place for a retest. We could use this upper level here that's a bit higher. The reason I'm choosing this level down here is because I'm a bit closer to the pivot. And by being a bit closer to the pivot, I think it's a better opportunity. I think that this one here could very well be effective. And we may reverse on this level right here, but until I see a stronger move, I'm still gonna rely on this one down here a bit lower. But I have heard that Sidney has gotten a little bit of Sidney Crosby has gotten a little bit of a reputation around the league of not being the toughest of men. Once again, I know nothing because I don't really watch hockey anymore. I stopped watching hockey in the mid-'90s when it was the Lemieux, Yager, Ron Francis era of Penguins hockey. After that, I kind of stopped. All right. The 4-hour chart here on the ZS, the soybean futures, we're still between our areas of supply and demand. There's really nothing to look at one way or the other. I mean, our supply area that's up here, We still have potential for a breakout above there. Our demand area is down here. Are there some levels in between? Yeah, but they're not good enough for me to jump all over. I have found that 15-minute levels on this market are probably not as strong as 1 hour. Well, they're not as strong as 1 hour on any market, but they're really not on this market. And then corn also still in between. So I don't really have a whole lot to add to corn or soy. And then yesterday we also looked at wheat. I did say that we had potentially a gap fill level in wheat, but the market didn't like that idea and just blew directly through the gap fill level. I mean, just went right through. And I'm not a huge fan of trading the gap fill levels on futures. I've said that a number of times. You always have gap fill levels on futures, but I don't find them to be as effective as they are on equities. I think when you look at equity markets, like, for example, frankly, there's one I've been looking at for months that I really, really want to see the dang thing get filled. On equity markets, gap fill levels are significantly more prevalent. But in the futures markets, I don't see them quite as effective, and I don't use them quite as much. Tactic in the 20-pound trading books. Good point. Good point. All right. So what I'm going to do is I'm going to share this one, and then we'll go talk about currencies. All right. So let's go talk to currency markets. Yeah, price usually overshoots the gap and goes the origin of the move that encompassed the gap. I agree with that, Liz. I very, very much agree with that. Price starts at the origin of the gap, goes back to where it started, and then moves, and then starts to make its moves. So, all right. So in our currencies and our bond markets yesterday, we did come back to our ZN supply area. So for those of you guys that were able to grab that one's actually still moving. Is anybody still in that short? If you're still in that short, I think now's the time to take your stop and move it down to this region. Now, why would I still be in 1, 2, 3, 4, 5? At 6 candles, you move your stop to break even. Great. If you moved your stop to break even, you should still be in the trade. You can move it down a little bit more to lock in a bit of profit at this point, but that level worked out pretty well. And that's frankly, I think one of the first trades we've had in bonds in quite a while. Now, looking a bit lower, if we get basing here, once again, we need quality basing, you may have a breakdown opportunity right there. New Zealand dollar. Not sure if Jose Alex is in with us or not this morning, but I show it for him. So we looked at the New Zealand dollar yesterday, and specifically the area we looked at was this 1 hour level right in here. Price did come up into this zone and give us a very strong move away. So for those of you that were in yesterday's session, hopefully you're able to catch this one and get the very strong move away in this New Zealand dollar. Actually, I think we looked at this on our Sunday Night Live trade room, and it had hit entry yesterday and has really been a strong mover. So this was a huge profit from yesterday for those of you that were able to jump in on that one. Next area that's really strong is this one here. The problem is it's not a great time of day. Now, for this market, it's not terrible because it's right around the market open. So if we get a retest, look to short right up in here. This area here that we've already hit once, I'm going to switch this to a confirmation, but I am going to leave those lines on the chart. So that was a really, really nice mover out of that level. The Aussie, whereas the New Zealand dollar was a really, really nice winner, the Aussie was a tiny woozer. We did get a little hit and then a move up, and then we based around inside of it before then dropping. So the fact that we hit it, moved around, based inside of it, and then dropped did actually set up for a breakdown. For those of you that were in front of it watching it, it set up for a pretty good little breakdown off of that level. And now that area looks like it could be a reversal point if price comes back to that region. It's pretty far away at this point. but definitely now stands as a potential reversal. This area up here is also going to be good, and frankly, so might this one here. So we've got a number of potential short opportunities. Nice, Jose. Glad. Well, and by the way, you're the only reason I look at it. That's not something I'd looked at regularly until I saw you coming in the room. So I've added that to my regular repertoire. Now I need to add more screens. Just what I need, more screens. So that would be the level I look at in the Aussie, 7046, 7052. The euro, so in our euro dollar, so looking here at the euro, we had a really nice move off of our 15-minute supply. So taking a look at this area in here, nice move off the 15-minute supply that we spoke about yesterday. And then it came back to our 15-minute demand, and we got a much better move off of the demand than we did off of the supply. So very strong move off of that 15-minute area demand. Now we've hit the supply, and we're starting to come down a little bit more. So where would be our next reversal? Our next reversal would be this area right in here. And if you notice, all we're doing is we're just playing the market between these areas of demand and supply. I mean, this one, the euro just kind of bounced between those three, right? Really strong moves between those three. That would be our next level and our next area. On a 4-hour chart, we're technically in an uptrend. Swing low, swing high, swing low, higher, swing high. But it's not a well-defined one as of yet, so this would have to be a confirmation short because we are in an uptrend. All right, Canadian dollar. So whereas the New Zealand dollar was good, the Aussie was not so good, the euro was good, the Canadian dollar was not so good. You guys see a pattern here forming? So this tells me that my currencies are all wonky because nobody knows where the dollar is going to go. And that's why we're seeing some of the Canadian or some of our currencies followed just like they're supposed to. And then the other two did not, broke right through the levels. And that's really what happens when you have an undecisive dollar. Right? In an indecisive dollar, that's when you'll have that kind of a move. So right now we're looking at 75.90, 75.92. Here in the Canadian dollar, I think is your best area of supply, which is a base drop below a pivot high. Stop obviously still has to go up in this region here. 4-hour chart on this is kind of meh, right? We do definitely have downward as the prevailing direction, but it's a little meh. Great British Pound yesterday. We did basing here in front of the level, which should have canceled out the trade. And then overnight, we did trade down into it, got a good rally away. But in reality, that level should have been canceled with any basing there in front of the level, which is exactly what we got. Now, it rallied up into some of these supply areas, and so now I need to go smaller to look for my next potential entry, and it would be right here, 29.57, 29.63. As my next potential area for a reversal if we get a pop. I don't know that we'll get a pop that high if we stay down all day, although that's not too far away from current price. And then the Japanese yen. So yesterday we talked about the yen. We talked about basing right in here. Before the breakout, we did get a bit of basing right in that region. Price broke down, just missed hitting what would be the target, and then came back up to the origin of our move and now has hit the target. So depending on how you place your stop, if you moved your stop to break even once we started going sideways, then you're probably out of that position without quite hitting target. If you didn't move your stop and you just left it in the overnight, you left your stop up here, then you've hit target as of now. Either way, there's no reason that you should have taken a loss on that position because it definitely didn't come above where your stop would be. But this would be our next reversal area, would be this wick over wick right here, 97.43 by 94.70, 94743 by 94769. Whew. That would be our next level there on the hourly chart. All right. Whew. So there we have it. I went through 30 full minutes of market view to see, which are going to be the markets that make the most sense for you today. as I look at these, we're always taking thoughts. We're always taking ideas. If you guys have any thoughts or any ideas or any questions that things that you want to see me cover, please type them in the chat box. Send me an email, support@tradersarmy.com, chuck.fulkerson@tradersarmy.com. Actually, it's probably a better way. That doesn't go to the support email. It comes directly to me. And so I'm here to help any way that I can. Don't know that I always can help, but I do my best whenever I can. So guys have any questions, shoot us an email. Until then, tomorrow we will be back, and so I will see you tomorrow. Peace out, everybody. See ya.